now. But MAS Financial reported what was a strong set of Q2 numbers with a healthy momentum, especially in the MFI loan book. Their net interest margins to improve both on a Q-on-Q basis as well as on a year-on-year basis. The stock has rallied around 15% itself in the past 3 months. Kamlesh Gandhi, who is the chairman and the MD of the company, now joins in to discuss the numbers. Mr. Gandhi, hi, welcome to the show. Well, I'm going to just start with your asset quality because that has managed to be stable this quarter as well. Your gross NPA ratio was at around 2.17%, net NPA at 1.47%. Tell us what the trends were in terms of the asset quality, your restructured book, and what might your guidance be going forward?
So, hi and good afternoon. So, as you know, we had a very strong quarter in terms of the AUM growth, and as you rightly remarked, on a very good asset quality. And if you see, we have been maintaining this range-bound asset quality anywhere between 2 to 2.25% of our net gross stage 3 assets since long. And this has been our characteristic not only for a quarter or two, but over 2.5 decades of our working, whereby we have prioritized asset quality, profitability over growth. But having said that, we have registered a very steady and a robust growth over all these years. And this quarter also, we could register a 27% growth in our AUM on a consolidated basis and also on a standalone basis, and correspondingly around 23% rise in profit on standalone basis and around 21% on a consolidated basis. So going forward, we see a strong momentum carrying forward in terms of the growth between 20-25%, accompanied by a very strong asset quality and also a very strong capitalization of the company. If you see, currently the capital adequacy is close to 25% with capital capital at around 21.1%. So all in all, a very satisfying quarter, and we see this momentum going forward.
Well, no reason to believe that this momentum won't continue if the past is something to go by. So, we've always spoken about you doing over 20-25% sort of CAGR on your AUM. What's interesting is that you had at the start of the year guided for AUM to cross that 10,000 crore mark by the end of the year. Now, it seems like you will do that in the third quarter itself. I just wanted your thoughts on what your AUM picture will look like across verticals over the next couple of years. The first one was the Wheels portfolio, where you wanted to, make it nearly 25% of your overall book. The second one is the MSME portfolio, which is close to around 40% of your book. Where does that stand? And the third one would be the housing finance opportunity, which you were looking at 1,000 crores there as well. So if you could give us a picture of how these three verticals in particular are likely to grow going forward.
See, going forward on an asset configuration, we have been a multi-product company and we have a well diversified asset profile. So on a 3 to 5 years basis, we see ourselves around 20 to 25% coming from housing, around 20 to 25% coming from the Wheels portfolio, that is two-wheeler, commercial vehicle and used car combined, and around 35 to 40% coming from SME and rest coming from our MEL portfolio. So that will be a well-diversified book from what we have currently, which is predominantly an MSME book of 80%. Over next 5 years, we see this going towards a very diversified asset profile.
Okay. Just a broader question, Mr. Gandhi. We just had some statements coming in from the Hero Motor call that the festive season, they are seeing momentum. The rural areas are also seeing some amount of momentum. What is your sense in terms of what the festive season might hold? Which segments do you think are seeing momentum at this point in time? And if you could compare it to, say, last year, same time, in terms of the trends.
So usually in retail financing across the segments we work, Q3 is always a festival season, right from Raksha Bandhan to Christmas. So this time also we are seeing a strong momentum, be it rural, semi-urban and urban places of our working. And we see that continuing this year also. So Q3 will once again give us an opportunity to increase our AUM as we guided at around 25%. And with festival around, I think we will be in a position to achieve that.
All right. And what about your outlook on NIMs? Because, going forward, the cost of funds are likely to increase. What are your thoughts on what NIMs would be for you going forward? You usually maintain that 6 to 7% sort of band.
So if you see this quarter also, we have maintained anywhere between at around 7% of NIMs. And going forward also, as we have always been sharing with all of you, that we'll be in a position to maintain NIMs in a range bound basis anywhere between 6.75 to 7%. And we see that holding on.
Okay. All right, so we're going to leave it on that note. Mr. Gandhi, thank you very much for joining in and speaking with us. So that's Mass Financial. The stock is just about lower by around 1.28%, but it's rallied around 11 odd percent this year, 11.5 odd percent this year. And just in the past 3 months, it's picked up around 15% in terms of an addition to its market capitalization. We'll